All right, happy SpaceX Day. We got ourselves a successful IPO here on Friday. Markets broadly, semiconductors led the charge this week. Very sharp snapback rally there. Remember, they were off by 5% plus last week, and the market was in pullback mode coming into this week. We did see more pullback, but we did stick a landing. We reversed, we went higher. There's still a major concern out there for me for the market cap weighted indexes. We're going to talk about that in this video. We're going to talk about the rotation that is absolutely happening here underneath the hood. And we're going to look at Bitcoin and ask ourselves, was that the bottom? Is the bottom in? Bold statement. Let's get into it. Hope you're doing well out here. SpaceX. So here is the intraday trading. I think 135 was the placement price here for shares, and we popped, close to 20%. Pretty orderly, successful by, most banking standards, Wall Street standards. And so we'll see how this starts trading. I don't have an opinion on it. I was tuned off on all of the 24/7 full court coverage of this on Friday, so I did not tune into a thing and didn't ask for a placement, didn't trade it. I would love to own the company at a cheaper price. We'll see how it goes. But for me, I just want to see the stock settle in. UFO, I thought this was interesting. So this is kind of the space proxy ETF, and this was down pretty sharply here on Friday. So it did not continue to hold its weight or water or trend higher. So maybe more explosive kind of 2 trillion plus demand or out the gate for SpaceX is what we wanted to see here. But there was more kind of selling here on Friday, and it was kind of a follow through week. Broad big trend is still up, but just notable here that Friday was, a down session sharply. Now, if we dial back to the earlier in the week, Apple, they had their famous annual WWDC conference, and it was sort of disappointing. I think analysts were expecting a more immediate solution to perhaps Siri and the upgrade and just a handful of things. I think everything seems to be in line and in the pipeline, but just longer than expected. And so this week we had a bit of a selling pressure here hit post that event, and this was the Mag 7 kind of standalone leader that was holding things up, and now we do have some cracks here. Another very important catalyst this week was Oracle. So Oracle had earnings, numbers were great, but they did announce that they would be raising more debt equity financing. Stock sort of, tumbled, to use CNBC's terminology, and here we go with a gap down and kind of back in the penalty box. Notably, we are off of the very depths of the lows here in Oracle after basically seeing a stock that got cut in half, but we are certainly resetting now. A move though from 135 all the way up to 250. I mean, that was an impressive run. So the fact that we're sort of recalibrating expectations here might not be the worst thing. This feels like a stock that's just trying to, gather its foundation again and build out the structure. For now, though, it looks a little bit broken, oversold in the short term, but a little bit broken here as we look at things. Now, exciting for us here at Trade Risk, we did launch Market Navigator. That is what we are calling our new sort of market environment breadth, sectors, Mag 7, industries, and most importantly, our sort of proprietary market state reading. So this launched officially this week. You can find links in the description. We're going to spend a lot of time going through every kind of nook and cranny here a little bit later in this video. So stick around and you get to see kind of a full tour and what it's telling us right now. And I think it's pretty valuable information. Now, another thing that just caught my eye this week, this is weekly returns. Semiconductors, again, very sharp snapback. Notice Bitcoin up here at 5.5%. And then you got IGV. Now, of course, IGV heavily influenced by Oracle, heavily influenced by Microsoft. Both of those heavyweights were down pretty sharply this week. But I think when you're just like looking at this sector kind of breakdown here, there's just a little bit to take note of here of some potential decoupling. Let's get into the numbers. Russell 2000, 4% up. That was the leader this week, followed by the Qs up 2.3%. Oil down pretty sharply. There does seem to be, and it seems more confident than ever, seeing some strategists that actually think a deal might legitimately be penciling through with the US and Iran. So that as hopes that the market can finally put the worst of this behind us. If we take a look at the SPY here, again, we did get that initial follow through selling, and then we had a nice rebound here on Wednesday. Volatility, basically the exact inverse, peaked about 22, still high or mid-teens up here around 17. And the US dollar pretty much flat this week. 10-year treasury yield down this week, which was nice. So again, always good to see a little pressure coming off of the 10-year. Now, sectors this week, there were a good amount of standouts here. So materials, staples, tech, financials, discretionary, right? All at the top here. So you had some very strong performance, some rotation under the hood, communication services, energy. Those are your only two negatives here. And when we look at breadth a little more, with our 52-week high metric, you can see that we are firming and building a base here and getting very consistent readings of stocks hitting 100 or more in the NYSE 52-week highs. That is, mildly encouraging. Again, we want to see this number start to shrink down. We want to see this start to push and get more spikes over 200, 300, 400, but it is firming here on the number of stocks hitting 52-week highs. And in fact, if we look at the percentage of stocks above a 20 SMA, we are trending up. Put to call ratio back in the middle now. And here's Bitcoin. We're going to talk about this in the second half of this video when we start looking at some charts, but it is consolidating. It was up this week. Don't forget, it ended in a very gloomy, dicey spot last Friday where it looked like the weekend trade could be just a gap down into the abyss into the 50s. That did not happen. We'll talk about why that's important a little bit later. And for next week, we've got FOMC. So we've got interest rate decision. I think it's like it's a lock effectively that, rates will be unchanged, but we'll get to see, of course, with the new Fed governor here now, comments and the thinking of future rate cuts or hikes. So that'll be interesting on Wednesday. Let's get into some charts. All right, almost forgot before we get into those charts, our sponsor here, Investors Business Daily. It is free MarketSurge week. It is running out fast, but in the description of this video, see if you can get the last few days of MarketSurge. No credit card, just drop your email, get an account, and enjoy this weekend. Do some analysis, build some watch lists, see if it's a good platform for you. I'll put the link in the description of this video, so check it out once you get done. All right, let's look at some charts now. So S&P 500, here we go. Daily time frame, you can see we did get a nice rebound in the market Thursday and Friday, but we did see continuation lower here to start off the week. We undercut the lows from the 19th, which is where we were looking for the first test of this market to hold. We did fill this gap back here from the, May 4th, May 5th. So all is to say it was a good kind of, hold, a buyer showing up, a pullback of what magnitude? 5% in the S&P 500. Pretty mild, contained so far, but are we out of the woods? That is the big question now. We got 2 days up and we're now coming back into where we chopped around and found just a little bit of hesitation here, just under 7,500. So S&P 500 off the lows, recovering a bit. Same thing for the NASDAQ 100. You can see we did continue lower. We had a very steep, sharp Tuesday panic sell-off. We got as low as 686. Ironically, we got right to the gap and held it. So we did not get that gap fill, which I feel like is a little unfortunate, right? Just in terms of, being a gap fill technical trader where you want to see those tested and filled and hold. We did not quite get there, but we did carve out and show some support around the 695 area. And we got about a 9%, 8%, 8.5% pullback here in the Qs, bouncing up into the end of the week. I want to switch gears to our new Market Navigator because I think this is going to start to help us here. So this is what things look like. If we go to our overview section, this is our new Market Navigator. And there's a couple of important points to take note of today. This week, we were questioning whether or not we would finally see a downgrade in our market environment state. Now, there's 3 states, strong, mixed, or weak. These are very important top level overview states. Once you get into one, you're really trying to build evidence to get yourself out of it. All right. So the important takeaway this week was, if we scroll down here, we are continuing our streak. For 46 days, we've been in the strong market regime. And so that does not change. And in fact, when we look at some of our supporting market context, we actually saw sector leadership broaden out. We saw industry participation broaden out, and we saw internals start to notch back up. This is all geared to, say, the next few weeks to month or two of how we're analyzing the market. So we saw very, sort of unanimous improvement here in the market state. We got more support across the board. We held the line, and so far life is good. Now, before I look at sectors, I want to just go to the Mag 7, because this is where things are uglier. And this is what has me concerned right now, particularly for the QQQ, to a lesser extent, S&P 500. If we look at our Mag 7 momentum, we've got 7 out of 7 of the Mag 7 now under pressure. Excuse me. AKA a sell signal or an exit signal or a step aside signal, however you want to view it. If we look down here, what you'll notice is Apple was the last one standing. And you can see that if we roll over on this chart, we got a sell signal on June 10th for Apple. And so we've been 3 days down. We had this nice, beautiful run since the late March, early April. And now the last sort of, man standing is down. Microsoft, right? Look at the dots here, and let me zoom in a little bit further. So we've got basically now 4 days that we've been in a sell signal here for Microsoft. If we go to Meta, we've got 4 days in a sell signal here for Meta. Tesla was a new one late in the week, the last to turn down on Thursday. Nvidia, 5 days down. Google from last week, and Amazon from last week as well. And so all of these sort of rolled over. And the question now we ask ourselves is, when we look at the Qs here and we see the Qs bouncing, how is this going to really accelerate here if the biggest weights are now in downtrends? So really what we need to ask ourselves when we look into next week is, can the Mag 7 catch a bid? Can they rebound? And can they return back up? That is what we're going to be looking for in our Market Navigator, is to get some of those uptrends back intact, because the Qs will not be able to climb up here with just semiconductors alone, right? And in fact, Nvidia, the biggest semiconductor, is in a sell state. So that's what has me concerned about the big mega caps here. If I go back to the Russell 2000, this is a different story. Look at the Russell here closing at weekly, or effectively all-time closing highs. This is where the rotation is. This is where there is leadership here. And this is where quant rockets, or having a process to go look for these individual rotation plays or individual stocks under the hood, start to matter, especially if we're going to see the market cap weighted stuff being sold off. Now, the one sort of way we could dispute this, or the thing that you may want to dismiss, right? And this is plausible, but we could make the case that the Mag 7 are hit sort of aggressively right now because of the rebalancing of the QQQ with SpaceX coming back in. That is a real, possibility here, where the NASDAQ 100 did a fast track inclusion of SpaceX, which means they have to now get the shares inside and get that balanced in the NASDAQ 100 index ETF, which means by definition, you are selling all of these things to make room for SpaceX. And so you could have had a lot of pressure here. Maybe it's over, right? And I know that rebalancing is happening over time. I don't have the exact dates or how they're structuring it, but that's the thing that could say, you know what, maybe this is a Mag 7 dip to buy, right? Very plausible. So these are the things we're keeping track of. But for now, the technicals here, they're all telling us that it looks dangerous in Mag 7 land. And if we look at sectors here, again, like I said, 6 out of the 7 are constructive, 6 out of the 11, healthcare at the lead, financials, real estate, staples. Those are kind of the top 4 here. Tech is still very strong as well. It is actually, in fact, in the top 4 with industrials as well. You can see all in our Market Navigator here. You can see what has been driving the action and where the buy and sell signals have been coming in our full screen chart. So this is a cool new view. I think the takeaway from this week is breadth improved, rotation happened, Mag 7 looks terrible, right? That is in a nutshell what's going on. So we're going to come back to that members area in just a little bit. But to round out the discussion on price action and some of these charts, I mean, I think, yeah, Russell 2000, it looks great right now. It's pushing to highs here towards the end of the week. So I think that is notable. I think XLE is still just fueling up here, no pun intended, but really sideways. Again, oil coming off, range bound, they look the same. We'll see if this deal gets inked, but this is still a spot to look for, you know, a breakout, a rotation. It's not here yet. I still think XLE makes sense in a portfolio for this regime, but the timing right now, we're still waiting for the all clear kind of breakout. Let's take a look. We touched on software earlier, so you can see we're kind of coming back down. We had a good rip up there into the 100s, and now we retraced basically 18%. Again, here's Microsoft. It looks terrible. And then Oracle, which again, we already looked at, coming back down. Take a quick peek at Bitcoin. So Bitcoin here, again, I'm losing credibility to say that I want to be bullish because I've attempted to be bullish so many times. But I think we've owned up to all the times where tactically I was bullish and then I had to get back out, take the loss. We talked about it back in here a few times and on we go. The thing that does have me excited, we talked about this last week, is that we are, right? It looks still extremely dangerous right now, right? Bear flag could easily still manifest, hasn't really broken out. It's not even fully a bear flag, but we are holding above these February lows. I think the fact that we did not puke last weekend, we did not do price discovery lower, while particularly on Tuesday, when market momentum was breaking to fresh lows here on the indexes, we did not see Bitcoin budge or make a lower low. And I think that was notable, very subtle clues. I also think the thing that's interesting is you're going to have some of the preferred equities, those treasury companies that are going to be kicking back into gear next week to be back on the bid of passively sort of, you know, stepping up as a buyers here for Bitcoin. That kind of comes into effect next week with a few of those different products. So you've got the ingredients here. And again, sentiment's in the toilets. Nobody wants to touch it and all those things. So again, it's not for the faint of heart. I'm not, you know, pounding the table here, but I would say you have a very clear line in the sand. February lows, right? Or you could just use the lows, but you could say, you know, 35 bucks. That's it for Bitcoin. And we'll see if it, you know, can actually hold. So that I think is notable. Let's go back to our dashboard because we're going to do a quick video today. And we're going to look at industries in our market navigator. So this is where we're looking at the S&P 1500. These are the GICS industries. There's 74 of them. And so we track these on a 1 month performance basis. You get a whole new group here in the top 10: REITs, airlines, IT services, REITs, textile, air, household durables. This looks nothing like what we had for 4 months, 5 months of this year, which is just semiconductor equipment and hardware and industrial, you know, all those things. And so you've got a very clear changing of the guard here over the past 1 month. Let me show you. So if we click here, you can see the number, you can see the stocks that we have in that industry. I think this one's funny because Duolingo is one I shared a while ago and it's still stuck in the mud. But here's what you'll notice, that the trade is grinding up slowly. It is now, let me go back, in the top 3 of industry ranks. So you're starting to hit a stock now that is getting some rotation in its group, and it's got this big old base here, and it's got a killer downtrend that is trying to emerge from. So again, clear risk here. This is not like a high flyer 52-week high breakout type of play. This is very much kind of coming off of the bottom here, but our model still likes it. We've been in it now for 38 days, but we're starting to catch a bit of a return here in Duolingo. So I think that's notable, and that's how industries, individual trade ideas can start to come together. I'll show you communications equipment. So number 9, this one's more in the known universe here, AAOI. So a lot of traders have eyes on this one. We've been in it for 72 days. So it's a long-term hold for us at this point, but it is flirting with our exit zone. It's been consolidating, still in kind of a messy range right now. We'll see how this resolves, but I think it's, again, notable that you're starting to get some of the, rotation happening at that industry level. So that's it. I think I'm going to leave it there. Shorter video today. Check out Market Navigator if you're someone that, particularly if you have a process. So if you're a discretionary trader, you have your own process, you don't need Quant Rocket signals or Galahad portfolio, you've got your own TA and the way you can approach markets. You just need some help spotting rotations, spotting, general guidelines on when the market's favorable. This hopefully would be helpful for you. It is a discounted membership. I think it's $39 a month we put it up at, and it is included with Quant Rockets and Galahad, but you can get it standalone. So that's it. That's what I got for this week. I hope you did well out there. Hope you're enjoying the warmer weather if you're on the East Coast and everywhere else. So thanks as always for tuning in. We'll see you back here next Friday. Take care.